Good morning and welcome aboard. Join us live in our group coaching session. Welcome to today's group coaching session hosted by daytradingmarkets.org. If you're new or experienced, join us. We can help you get set up, help you trade better. Watch, listen, learn to trade better. We have trading account funding available, trading platforms available. We're focused on the S&P 500 E-mini here. Looking to do 2, 3, 4, 5 trades. We're going to pick up 2 points plus in each trade. Everything we do is for educational purposes only. Nothing's be taken as direct trading or investment advice. Go to your browser, put in daytradingmarkets.org, register for Zoom. For those that are coming in, based on a reach out through our socials, you get a free access pass to come in and join us. Come in, kick the tires, see if trading is for you. Our sessions go from 8:15 to 11, 8:15 a.m. Eastern Time to 11. We are live in Zoom. Your host is a 25-year veteran trader of the trading pits in Chicago. He's actively scalping. He is your host and mentor for these sessions. We also offer one-on-one coaching for those interested in taking their trading to the next level. If you have a trading platform, bring it. Set it to the S&P 500 E-mini. If you need a trading platform, we have it. And if you're interested in earning a funded trading account, we have an affiliate that can help you get set up with that. We'll be popping in and out. As individuals come in, we will invite them into daytradingmarkets.org. As we get closer to the opening bell, which is at 9:30 Eastern Time, right now it's 9:04. We set the table for the morning session by giving out coaching levels. These are key levels in the S&P 500 E-mini. The pivot and other levels on top and bottom of that pivot. So pop in and join us. If you're connecting with us after today's session, come into daytradingmarkets.org. Register, you get an email to come in. Click on the link, drop yourself right into Zoom. We'll welcome you. We'll send you out a welcome message. It is a little detailed message that describes the services that we offer, what the opportunity for you is based on these services going forward. If you like what we're doing here, tell your friends. Daytradingmarkets.org. There's a lot that goes on here, both publicly and privately. Publicly, as you hear my voice, and privately in the background, as we're working with traders and helping them develop what we call consistent profitability in their trading. Saul's going to be joining us shortly. Don is here. Maureen will be joining us shortly. Got a nice group of traders in here on a daily basis. If you're coming into our socials based on our social outreach, please like and share us and follow us. Find our content within that social. Share it, like it, follow, heart. And take a moment to pop into our home base, which is Zoom. That's the place where the action is. That's the area of really concentration on developing you as the best trader you can be. And again, we have a lot of traders out there that just aren't getting it done, that really want to focus, buckle down, have somebody help shed the stuff that's not working, help add in price action trading as an opportunity. And again, when you pop in, be prepared to write the levels down. These are today's coaching levels. The pivot and other levels on top and bottom of that pivot, these are the actionable areas for this morning's trade. I would also suggest that the concept here is that we teach and mentor you how to trade and trade better on a daily basis. So what you picked up today, you apply tomorrow. Put up an S&P 500 E-mini chart if you have it. And again, those that are joining us through our socials, welcome. This is daytradingmarkets.org. Coaching session, daily coaching session. We're looking to do 2, 3, 4, 5 trades. We're looking to pick up 2 points plus in each trade. It equates to dollars to a pickup. We work the market. We open up the service at 8:15 a.m. Eastern time. We work the market based on this coaching session until 11. This is a real-time trade action coaching session. To take a moment to come out of our socials into daytradingmarkets.org with a free pass. That's right. It's just quick registration. It's a free access pass to come in. So join us. You should drop right in or check your email for a confirmation and then use that as the link to come in on a daily basis. And again, if you like what we're doing here, tell your friends. Yeah, you can even send people daytradingmarkets.org as the link. This is a price action trading methodology that starts out with setting key levels, a pivot and other levels on top and bottom of that pivot, then work in those levels. The action of putting trades on and taking them off, we encourage individuals to get themselves set up with a trading account, which we have for you. So come in and we can turn you on to one of our affiliates. If you're interested in earning a funded trading account, that is a great way to go. And you set up yourself with an account. You work with our partner. The key is that you receive the levels, the pivot and other levels on top and bottom of that pivot. You can load them into your software and you can start out in simulation mode so that you can practice in simulation at no market risk to yourself and get better and better at your trading. And then when you're ready, based on this coaching session, you can switch to real-time trading, either with your own money up, if that's the way you choose, or utilizing one of our sponsors' money, or I should say our affiliates' money. being able to be in a position to work the morning session potentially on a daily basis as you see fit, be able to come and extract money from the market is a pretty good feeling. And do us a solid while you're coming into our socials. Like us, share us, repost us, follow us, heart us. Whatever you do based on your world, help us get out of the box. We've got a number of people transitioning out of our socials right into our Zoom. Use daytradingmarkets.org. Just put it in a separate browser, pop it in. It's quick registration, it's free. Come in with a free access pass, ask questions, kick the tires. See if this is for you. And again, there's a lot that goes on publicly and privately here, so it's best to join us in Zoom, particularly if you're interested in earning money for yourself as an entrepreneur based on your efforts. And we appreciate you liking us and following us. You see that in the background. We appreciate it. Thank you. Yeah, the S&P 500 E-mini is a great instrument to trade, in my opinion anyway. It's highly liquid. It moves up and down. Make money on the short side and the long side. Hey, Philippos, welcome. David, good morning. Everybody else, good morning. Philippos, I'll send you out our, so Philippos made the transition from our socials into Zoom live. Welcome. I'm going to send you out our introductory message so you have a handle on what we're doing. It's available to everybody that comes into Zoom. And based on our social outreach, if people are interested in staying and learning how to trade, learning how to develop skill, to be able to pick up the $200, $300, $400, $500, $600 per session. We have a super discount for you. And that's all indicated based on the welcome message. But you have a free access pass, so pop in, stick around for a week. Come in for the rest of next week. Join us live. And, when you get set up for a trading account and set it to simulation, you really have a unique ability to work on it, see if you're comfortable with it. One of the nice things about what we offer is that you can see if you're any good at it. Now, when you register for Zoom, it should drop you right in. In other words, we're live. You come right over, click a few buttons, you're in. You have a free access pass. You can supplement your, well, actually it's interesting. It's for serious, if you're interested in, well, let's say you become serious at trading, it's a great opportunity to make money for yourself. You just got to be good at it, and we're in the helping you get good at it business. Now we're doing this one-on-one, well, this group coaching session is part of our service offering. It's hosted by a 25-year veteran trader of the trading pits in Chicago, supplemented by his wingmen and wing lady. What do I call it, a wing lady? Wing woman? How about trader? By two traders, Don and Maureen. We work the session until 11. We look to do 2, 3, 4, 5 trades, whether it's in simulation mode or real time. You're looking to pick up 2, 3, 4, 5, $600 per session. You're actively putting trades on and taking them off based on a price action trading methodology that's taught to you. Starts out with key price action scalping levels. We love it when you like and share us or repost us. So it's really helpful for us. Appreciate it. We can see that happening in real time. Filipinos, let us know you got our welcome message in chat and Zoom. Give us a quick update on where you are and where you'd like to be based on your trading. If you need a trading platform or interested in getting set up to earn a funded trading account, so we open up the service at 8:15 Eastern time. Right now it's 9:21. We're about to get underway with our morning session, coaching session. When your host pops in, He's going to take over the mic. We're going to work the session together. If you're not prepared to work the session, that's fine. We can help you get set up so you can work it next week. Take the initiative for yourself. Can't do it for you. You got to pop into daytradingmarkets.org. It's not .com, it's .org. Hey, Anupam, good morning. Michael, good morning. Hey, David, I don't know if you're in front of your computer, but good morning. Filipinos, welcome. Everybody else, good morning. For those that are coming in through our social outreach, pop into daytradingmarkets.org and join us live in Zoom. Once you do that, you'll get an invitation to come in with a free access pass for a week. We'll have you get set up with a platform if you need it. If you are looking to earn a funded trading account, we can help you get set up in that regard. You set everything to simulation. You work with real-time charts, real-time data, real-time order entry in simulation mode. And then ultimately when you're ready, you just flip the switch and you go back and forth. Hey, Frank, how are you? So Frank, a little feedback would be helpful. Send you out our welcome message. So if you want to get our discount, it's in there for you.
Good morning.
Hey, Marina, just made you co-host, I think. Oops.
Yep.
I just
Thanks.
tried.
Yes, you did.
Did it work?
Yes.
So I see here that, let's see, something's going on. There we go. I'm going to send you out a, actually, I don't have your email, so I'll send it over the weekend. I'll send you the couple pictures you can use for your background. We talked about that yesterday, but
Yeah, there. I just posted it for you. Thanks,
okay.
Brad.
No problem. Appreciate you. Got to get Don to get his up. He had to dig his camera out. I think he had it shoved in a corner.
With a cell phone.
Right. I keep telling him to go on and look at stuff. I think I got to send him a phone. But, I've asked him that question before. And he, he puts up the sign of the cross. He doesn't want it. Looks like a lot of action's happening out there. They're really moving forward. But I heard somebody had said today, I think it was on Mornings with Maria, that the Fed has indicated it may slow down the rate decreases, because every time they do it, the market tends to back up into higher rates. I thought that was interesting. Like the market's way ahead of what the Fed's doing, but also it's backfiring a little bit.
Yep. Who knows, right?
Yeah, you never know until it happens. I was hoping because I got some real estate to go in Florida, and we put it on hold until after the election.
Oh, you found a place in Florida?
No. My mom had a place, and my sister actually had a place, and we lost them this past year. So
Oh,
so she was 98, which is wonderful. My sister was untimely, so that
I'm sorry to hear that.
that stung. But they have, it's all, being handled not by me, but one of the things they were a little unsure based on how everything would be based on the election. And it looks like things have starting to loosen up, but I think it's going to take a little time. So we got our fingers crossed.
Yep. I hear that.
So Sol's in the house. For those that are coming out of our socials, join us live in daytradingmarkets.org. Sol's putting up his charts. He's going to take over the session. Donna Marina here also. Calvin, welcome. Hey, Ash.
Good morning. Let's give you our levels for this morning. Our pivot this morning is 59.38. 59.38. Upside resistance at 46, 55, 63, 74, 85. Support below at 30, 21, 11, 01, and 58.90. Pivot 38, support 30, 21, 11, 01, 58.90. Upside at 46, 55, 63, 74, and 85. All right, welcome some new folks that are here. We're trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out. In addition to any price action trades that might occur, a combination of both of those gives us our setups for this morning. Market here reacting to what the Fed what Powell said yesterday late afternoon, and kind of pushing down here a little bit more, continuing to push down here a little bit more. As we're opening up here in the lows, you can see we've kind of range bound here for the last few hours. We'll see where today or what today brings us. There are the levels in the chat for us, except we have to put them out to all participants. And I'll get that up there for you. There it is.
There we go.
Thank you. I appreciate that. This morning, we have a Fed speak right now. And at 9 o'clock, we got business inventories. Yield on the 10 is trading at 444. Again, we talked about the dynamics there with the bond market and how it's foretelling something, higher inflation. At least looks like what they're saying, even though the Fed did last week cut rates again. Now they're talking about maybe not cutting rates at their next meeting, even though they thought that they were going to have at least a 1 point cut between when they started their rotation to the downside. But it doesn't look like they're going to get there, only because the bond market is telling you something different. So we'll see what happens. All right, market uptick in here. We got a little resistance around the 46 area. You can see our blue bands coming in there at 44. If that stuff interests you. Again, we are scalping the market. For those of you who are new to the room, we are trading many S&Ps. We're looking for opportunities to scalp the market based on these levels as support and resistance areas, in addition to any price action trades that might occur. We focus on the morning hours to give us our opportunities, and we average about 4 to 5 trades a day on any given day, and we try not to overtrade, and we also have to test our patience in regards to waiting for opportunities to trade. Again, we're scalping the market. Right now we're looking for 2 to 3 points, and that could change based on volatility in the market. For the time being, it seems like that is what is where we're at. But like I said, when volatility is injected to the market, we might have to expand our stops a little bit. But let's get there when we get there. Again, bond market continues to downtick here. The relationship with equities lately they've been going the same way. I don't know, maybe we'll get inverse trade at some point, but we'll see. So we're just kind of bouncing around here. We got a little number coming out here at 9 o'clock, top of the hour. For those of you who are new into the room, if anybody has any questions, please feel free to ask in the chat. We don't mind questions. We're looking, again, for opportunities to scalp. And the areas that we are focusing on, the levels in the chat. If you bring up the chat, you'll see them. If you don't see them, let us know, and I'll repeat them for you. Again, put whatever comments you have in the chat so we can understand if you have any questions in regards to how the process here, the methodology is concerned. Anything I talk about in regards to opportunities to trade, any kind of setup that we have definitely is taught in our coaching classes that we offer, or education courses that we offer. If you're new to the game, that's great. If you've been trading for a while and need some new setups or new opportunities, or maybe a new way of looking at the market, that's also a good opportunity for you as well. As the market slowly downticks here, we're looking at the 30 area. Now, what I like to do in regards to any areas that I'm talking about, I like to scale in around that area. So I like to scale in a point above and below an area, or below and above an area, depending on how you look at it. And that way I'm not going to be perfect in this game, so I try to make sure I get in, at least giving me an opportunity. And then whatever the situation may be, we're always using our stops to protect us from any market that kind of runs away from us a little bit. Again, we don't know if that's going to happen or not. We just all we can do is trade the market, whatever the opportunities give us. So we got right down to 31 there, but did not get filled. And we had a nice rotation. I did not get filled there at 31 as we quickly come back down here. So be a little bit careful there at 31 if you at 31. Only because we're on a new band as well. A new bar, I should say, band. New bar as well. So it would have been nice to get filled down there, but I did not get filled. Anybody get filled down there at 31? Because I did not. And so, again, 31 is my first entry point against my 30. And we did have a nice rotation off of it if we did get filled, but unfortunately, I did not get it. So I would have to be a little bit careful there in regards to if I keep my 30 in there, 31 level in there or not. And the 30 level, I'm keeping that level with the 29. And again, keeping my stops in place also if I get filled. So that's how we kind of roll against here. Now, if we come back down here, test it again, and for the next 5 minutes or so, and we don't get filled, or we don't make a new low, my 30s might not be any good anymore. So again, we're looking at price action to give us direction as to how we're going to enter our trades. Obviously, the level here is a little bit more riskier, so I would even trade it a little bit smaller if you're trading multiple contracts. So you're always taking your cues from what the market price action is telling us. That way it helps us minimize our risk exposure if we're wrong, and also try to maximize profit there if we do get in at the right price and have a nice rotation off of it. But again, you got to work an order. I mean, this is what trading's about. We were not going to be blindly leaving orders in there just because we feel it's that's because of level, even though the price action is telling us something different. So keep that in mind if you're trading, and this is what traders do, right? So bond market here down ticking again. The yield's going up, and I think it's affecting the market here a little bit. Definitely affecting the market in regards to pressure on the market, because I think the bond market, like I say, it keeps telling us something different as we come down here to the 30 area. Again, keep your stops in place, and like I said earlier, it's a lot riskier right now than it was a little bit ago. We did not get the 29, and we're getting a nice rotation here, and there we go. Nice little quick trade there against the 30 area. Just had to make that a little adjustment there so we can minimize our risk if you did get in there, if you didn't get in there at 31. But the 30 area here worked very nicely. Did not get the 29. We missed the 29 by just one little tick, but that's okay. So now I would cancel I'm canceling my 29 as well, and take my profits against the 30, and kind of be happy. And if you're trading multiple contracts and you can scale out of them, you're getting a little bit more than 2 or 3 points here on these trades. So this is a nice trade there, Don. This is what we're looking at. This is how we kind of do our thing here. And again, we're getting at least 4 points here if you are scaling out or if you have multiple contracts. Again, everybody here trades differently. Nobody here trades the same way. And we had a nice rotation there down to the 30 area, and nice rotation back up. Missed the 29s by just that much. All right, so now we're kind of flat, or at least I am. And I would say we're looking for our next downside support is down at 21. Upside resistance right now probably would be around the 41 area. A little resistance, intermediate resistance, even though we have 46, but that's a price action opportunity there if you are looking for one. So if anybody has any questions, again, kind of walked you through that trade there. Hopefully you were able to make a little bit of money against that 30 area. And if anybody has any questions, feel free to ask in the chat. We are trading mini S&Ps. We're looking for opportunities to scalp based on the levels and price action trades. So this is kind of what we do here on an everyday basis. And again, we're always at the mercy of volatility, and again, we might have to expand our stops. Sometimes we have to go to 3 to 4, 4 or 5 point stops and 4 or 5 point profit targets. It all depends on the volatility in the market. You have a small number coming out here. Business inventories coming out here at 9 o'clock. If you were trading yesterday afternoon, now the levels you can use all day. Even though we kind of focus on the morning hours until about 10 o'clock here to give us our opportunities. And again, we trade 4 or 5 trades a day. Now we try not to overtrade. Worst thing you can do here is overtrade, and then the second worst thing you can do here is stay all day on and try to get your money back. And so we try to stay away from those concepts, because all that creates is angst and undue pressure. And also, we like to, not be standing here and giving the brokerage houses and overtrading all these opportunities to just make money off of us. Again, like I said, we have a little resistance around the 41 here if you're a little aggressive. So we don't like to overtrade, and we definitely don't like to give overtrade and give the brokerage houses more commissions. So we gotta try to keep that low. But my point is that we do use the levels all day long. They are there for you to use all day long. I think, especially in the afternoon, you can use the levels as areas of if you had to trade or if you want to trade all day, if you're looking at the market in the afternoon, I would just trade the levels instead of trading price action trades. The price action trades are good, but a little bit more, a little different. The dynamics change as the day goes on. And I think what we have in the morning here works better for us. Business inventories is coming out here at 9 o'clock, and then there is definitely going to be a Fed speak at 12:15 if you're going to be trading around then. And if you were trading yesterday afternoon after Powell spoke, we did have, I think we had 73 on the downside. I think we had a nice rotation down to the 72 area there and a nice rotation back up. So if you were trading in the afternoon there, if you used our levels, they worked out pretty good. Like I said, the levels, it definitely can work all day long if you were going to be trading. All right, we're coming back down here to these interim lows. Our next support level on the downside is down at the 21 area. Again, I would not be doing the 29 if you didn't get filled because we got down to 29 and a quarter here. And we'd be looking at the 21 area. I know it's boring sometimes not to trade because you feel like you have to because you see the numbers flickering on the screen, you know, in front of your order book. But you need good reasons to get into opportunities. We just don't trade for trading's sake. So levels are one, price action trades are another, and everybody here, you know, sees the thin markets a little bit differently, and you might have different price action trades, or you might see different setups that you use, and there's nothing wrong with that as long as you're feeling comfortable and confident with it. And the thing is, we always need a reason to trade. We're not just going to jump in because you know we see the numbers flickering on the screen. If you have a good reason to trade, if you've seen a trade that worked for you before, and you want to take advantage of it, with the setup, however it is, technical or whatever, then take the trade as long as you know what it is and how it works. We try to keep it here focused on what we try to do here, simply because we put together a methodology that kind of takes advantage of ebbs and flows of the market and pretty much low risk, considering this is commodity trading. Low risk in the sense of, you know, you're trading one lots and this and that, but if you're trading multiple contracts, it could, you know, you could obviously make and lose money depending on your risk tolerance. And everybody here has different risk tolerances. Nobody here trades the same way. Again, if anybody has any questions, feel free to ask in the chat. You'll see in the chat the levels that we gave out this morning. They're there to guide us through the day. You can see our first support level there was at 30, and we got down to 29 and change and had a nice rotation about got all the way back up to 36, 37, and definitely can take more than 2 or 3 points out of a trade depending on how you manage those trades and how many contracts you trade. The next level you see on the downside there is down at 21. That's our next support level that we're going to be focused in on. Right now we've got a little resistance around 41, 42 area. That's a price action opportunity there for those of you who are looking for a different little opportunity. Otherwise, you can see on the top side, we have our first resistance area there is at the 46 area. You can see we did go right up to 38, which is our pivot, and then rotated off of that. Business inventory is coming out here in about 15 minutes or so. Again, I don't know how much it's going to create any opportunity or volatility in the market. We just know that it's out there, and we like to stay kind of flat when numbers are released. You never know how these markets react to fundamentals, even though they might be a small number or not, but we like to be flat when those numbers are released. So right now I'm flat anyway, unless we, you know, who knows where we're going to go in about 14, 13 minutes or so. And 21's our next downside support, and upside we're looking at the 41, 42 area, at least for the time being. That could change, and see what happens. Patience is very important. You gotta let the market kind of play itself out and give us a reason to get into any opportunity, whether it be long or short. And again, whatever we're going to do, whatever trade you're going to put on, you're always having a stop place right behind it or in front of it, depending on how you look at it, I guess. All right, a little range bound here. Be patient. All right, we're quickly coming up here. Little resistance, I said 41, 42. If you're very aggressive, maybe you're going to dip your toe here a little bit. All right, so if you got in there at 40 against 41 there, nice little rotation. Very quick rotation. And nice little opportunity there if you did jump in. Again, we scale in, so we're not going to be perfect. We talk about that all the time. So we talked about it when we were talking about the 30 area. I kind of walked you through that and how we do that. Same thing here. If we have price action play, it's kind of the same opportunity, but I trade it a little bit smaller than, if I'm doing 4 or 5 lots on the downside or on a level, maybe I'm doing 2 lots here on those price action trades, depending on how much I like it or not. But that was a nice little rotation there against the little resistance area that we talked about. Got up to 40 and change. Obviously didn't get to 41, but again, we're not going to be perfect. We talk about that all the time. You have to take that into consideration when you're trading. If you're trading 1 lots, that's fine. There's nothing wrong with that at all. You just got to just be patient and then make the adjustment. You don't have to worry that you missed it because you're trading 1 lot. You just make the adjustment and then look for the next opportunity. So there's nothing wrong with trading 1 lot. You just have to adjust to the market. And if you didn't get the entry point, that's fine. Just don't chase and we'll find the next opportunity when it presents itself. So nothing wrong with trading one lots either. You just have to find the entry point, and if it doesn't get filled, then make the adjustment. Like I did with the 20, with the 30, with the 29 against the 30 area. I'm sorry, with the 31 against the 30 area on that first rotation to the downside. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. The number here is coming out in about top of the hour, so in about 7 minutes, 8 minutes. Good question there, Michael. I no. The easiest answer is to say no, because the movement in the micros are 1/10 the move in the S&Ps. So I know you're trying to do it 3 lots because it comes out to 30% or whatever. I just think unless your commissions are very low and in the micros, I would rather you stick to the big contract and just make the adjustment. I think it would be better for you than trying to. Again, it all depends on your commissions. If your commission structure is small enough and they are not killing you, if you're taking. Problem with trading the micros and you're only taking 2 or 3 points is that your commissions overtake you and you overtrade because you're trading micros, and you can trade it because you're not losing that much money. If you lose, you know what I'm saying? But the better bang for your money, and also the fact that we also don't want to overtrade, and especially with the next point is that you don't want to give more money to the brokerage houses. So all those things come into play, and so consequently, if your commission structure is small enough where you're not getting bamboozled on trading one lot in the micros versus trading one lot in the S&Ps, then I would just trade the S&P, the big contract. And micros are good if your commission structure is small. If you're paying even $2 technically, let's put it this way: if you're trading around $4 a contract in the S&P, because it's 1/10 the size, you should be paying 40 cents a contract in the micros. I can tell you right now, they ain't charging you 40 cents a contract, right? To keep everything on an even scale. But they don't charge. If they were charging me 40 cents a contract, I'd be trading it. But no, they're not doing that, even though it's 1/10 the size, right? So that's how I look at it. So I'd rather, make the adjustment according to the price action instead of trying to trade in the micros, and just, it's just not the commission way. The way the commissions work, it just doesn't work out. I haven't heard of 40 cents commissions on the micros, even though it's 1/10 the price compared to the minis. All right. Yeah, so we're down here at these lows again. We didn't have a nice rotation. We talked about the 41, 42 area, got up to 40 and change there, and maybe you were able to jump in. That was a price action opportunity. We do say that we have price action trades in addition to the levels that we gave out. That was definitely a price action trade, and I mentioned it earlier. Again, depending on how you entered and how you got into that trade, would determine whether you jumped in and took advantage of it, because obviously we didn't get up to 41. I got up to 40 and a half, I think, and rotated off. And now we've got a number coming out here in about, what is it, 2 minutes, 3 minutes or so. And I'd like to be flat. The downside support you can see, and you'll see in the chat box there is down at the 21 area. All right, we do have, again, we're flat, and we do have a number coming out here in a couple minutes, less than a couple minutes. Only problem is, again, we don't like to have any positions on when the numbers are released. So even though we're kind of breaking down here a little bit, you have to be careful here against, we have 21 as our next support level. And market's kind of breaking down here a touch. So take that into consideration if you're going to be trading and knowing that there's a number going to be coming out here in about a minute or so. So again, depending on your risk tolerance and how much risk you want to take, and understanding that there is a number, and we don't like to be flat when the number is released. Some, obviously, some of you like to be flat, some of you don't, some of you like the action. So either case, know that there's a number coming out here, and we're coming close to our level. So, and this could be a reaction to the number. Well, maybe they know, somebody hints at what they might think the number might be, and somebody's taking a play. Who knows? I don't know how this works. But just be mindful of the fact that we do have a number coming out here momentarily. And even though it's a small number, but you just never know. And we have support down at the 21 area. All right, pressure on the market here a little bit. Number is out. We got a big 500 lot there at 22 and a quarter. My first entry point there is at 22. So, okay. Let's see if the 500 lot stays there. They always go after those big lots. I don't know how. And if somebody sees it and they're like, oh, I need to go get that. So my first entry point there is 22. Again, if it's a little bit riskier, because it's going down here quick, it's fine. Just keep your stop in place. Sometimes you need that volatility to find a level to get triggered, so. All right, again, looking at the 21 area. That 500 let's carrying that person, scaring the market away for a second, but they're taking it out. There we go. I knew they were going to take it out. Even an issue. All right, going down here to the 21 area. All right, we're down here to 21 now. So again, keep your stop in place. We never know what reason that this market is down ticking here all of a sudden. All right, nice little rotation there against the 21 area. Quick little pop back up here. And again, if you have multiple contracts, you're trying to work out of them, but definitely take some profits. All right, got filled there at 20. You get a nice little pop back up here. Again, take your profits. We're not going to love any trade we put on, and especially when it's down ticking like this. Nothing wrong with taking profits and moving on to the next opportunity. And that's kind of what we kind of like to do here. And if you have any extra contracts left over, and you want to try to see if this is might get you a little bit more than 2 or 3 points, just keep the stop in place. But you're not going to lose any money on the trade. If you're trading multiple contracts, you're just keeping your smallest amount that you're going to try to squeeze out. And the next level on the downside we're looking at is down at 11. Again, if anybody has any questions, please feel free to ask in the chat. But don't mind questions. And if you look at the chat, you'll see the levels that I gave out this morning, and we use them as a guide to the day. A nice rotation here against our 21 area, giving us a quick scalping opportunity. The next support level we got is down at E11. A little volatility in the market here. Market again has been kind of drifting sideways, and then yesterday after Powell spoke, the market's been under a little bit of pressure and continues to be under a little bit of pressure this morning. If you ask where could you have gotten short, we did suggest a little short against the 41, 42 area up on the upside, and it did get up to 40 and change. And again, we talked about scaling in. If you did scale in, then maybe you were able to jump in there at 40. And again, we everybody here trades differently, so it depends on how you held on to that trade. If you didn't hold on to it, you wanted to stay short, then maybe that was the opportunity. So it's not like we're always, counter trending, or we're just finding areas that we believe we can get in and get long, and then we're short, and then try to take advantage of that opportunity. And sometimes if you're, again, everybody here trades differently, and you have to remember that. So if you did get short up there and wanted to stay short, you're getting a nice rotation down here. You're a patient man there, Don.
Tell you what, it's sure making it tough to hold.
Yeah, if anybody could do it here, you can. Not me. Okay, so Frank asks, like now we are after the 21, low, the short are going to be reversal. I'm going to go long. Well, we got long at the 21 area and took a scalp. Remember, we are scalping here. So the area that we wanted to get short would have been the 41, 42 area above, like I mentioned before. That's where we had some resistance. So that would have been the area to get short. Again, we don't know which way markets are going. And if you can, somebody's going to tell me here that they knew the market was going to go down, I would have said, that's great. You should have told me. And, we all could have made money, but we just never know which way markets are going to go. The short up there at the 41 area, if you did get in, that was a good entry point to get short, and then maybe ride it all the way down here if you wanted to get short. Considering there's a little bit of pressure here on the downside, I would just be scalping these, and then if you have a stop on anything, any other long that you're going to have, if you're trading multiple contracts, let's say you're trading 5 contracts, you get out of 4 and keep 1 with a stop in case the market does it's a low, and then you can ride that up a little bit. Right now we've got resistance around the 33 area on the upside. That's where I would look to get short. I would not be trying to sell it into these lows because the good place to sell it would have been the 40 above that I mentioned earlier. Right now, I'd be looking at the 11 area next as a little buying area to see if I can't scalp that area as well. And we're quickly coming down to that. And then remember, I try to scale in around there, so I'm looking the point above and below. So my first entry point around the 11 area here would be the 12, and then the 11, and then the 10. And then I would keep my stop in around 7 for everything. And that's what I would do, and see if I can't scale out of it. If I get filled on everything, that'd be great, and then I just kind of scale out of them and keep 1 contract and see if I can't, if the market bounces nicely off of that to get more than 2 or 3 points out of the trade. That's great. If not, it's fine. I made money on the area and then move on to the next to the next trade. So we're not really looking to hit home runs, so to speak. We're just looking to take advantage of ebbs and flows. All right, coming down here to the 11 area. Again, got it's a 12 area is my first entry point. So I've got that right now and got a nice little quick rotation here off of that. And again, if you're scaling out, you get out of some, you get out of some more, and then, keep a little bit. We're on the same bar, so we did bounce nicely there against the 11 area. We got filled there at 12 if you're scaling around it. Obviously, if you got 11, we didn't get it, but we're on the same bar, so it's a little riskier. But I'm still leaving my 11 and 10 in there. But I took profits against the 12 already. And again, whatever trades any trade I'm putting on. Like I said, you already know where my stop is on the downside, and we'll just go from there. Got down to 11.5 here. Now I got my 11s. I can get a little bit of rotation here against that. All right, I got my 11s and got a nice little rotation against that here. And if you're trying to stay long, this is where you would try to stay long to take a little bit more than 2 or 3 points. As you can see, we're getting a nice little pop back up here to get like 4 or 5 points on the trade. If you're trading multiple contracts, you're just getting out of one, then another one, and then try to hold one and see if we can push it up a little bit higher. Good job there, Michael. Nice little trade there for us. If you did jump in against the 12 and then against the 11, and it was a perfect fill, 1075. So sometimes we complain that we don't get filled there because we miss our entry point by just a tick. But here's a situation where we got filled perfectly because it went down to 1075 and we took no heat on whatsoever. So we always forget this trade because it's supposed to happen, and then we always complain about, oh, I can't believe I didn't get filled on my trade. We missed it by one tick, because that's going to happen too. But we never remember this trade that we had filled perfectly and took no heat on it. Hope that answers your question there, Frank. Gonna work you through this trade here. All right, so now that we've made money on the 12s and the 11s, I would trade, if you're going to leave the 10 in there on the low end of that, I said my stop would have been at 7 on all of that if I got filled on everything. 3 points from my lowest entry point. Again, that's a little riskier, but that's how I obviously you can adjust that according to your response, but at this point, it's where I'm looking at to give me a good opportunity to stay within a trade and not get blown out of it, and give me a chance. And then, like I said, I can always scale out of them. I can minimize my risk exposure, accordingly. All right. So again, if you're going to leave the 10 in, obviously it's a little riskier, but we did have a nice rotation against the 12, nice rotation against the 11. And you definitely could have taken a little bit more than 2 or 3 points out of the 11 there. Got all the way up to, I think, 16 and change, 17 almost. So nice little scalping opportunity for us. So our levels have been coming in nicely and working very nicely for us this morning. Again, our price action trade there was a little sale against the 40 area, 41 area, got up to 40 and change. If you were looking to get short, that was the place up there. And then now we're just coming back down here. So if you're trying to stay long, maybe this will be the bottom. Who knows? Then just keep a trend, keep a stop in there, like I would say at 9, and see if we can't, maybe get a push all the way up to the, I would say 23 area would be a really nice exit strategy if you were trying to stay long. This is only if you made money on everything else and you just want to keep one lot or your smallest amount to try to get a little push higher. So this is where you can try to keep one, see what happens with it, or your smallest amount of contracts, and then see if we can get a 23 would be, that'd be a nice exit strategy if we could get up there. All right. Anybody else have any questions? Make sure you put them in the chat. At least we've been kind of working through. The markets have been very nice to us. They're giving us nice rotations here against our levels, giving us a nice little opportunity. Doesn't always work out this way. Obviously, you guys know we've been here a while. Sometimes we do get stopped out. This is part of the game. And also, like I said, if you're up enough money and you're happy with the amount of money that you made this morning, and you don't have to keep trading. You made your goal for the day, and you're good to go. You're good to go, especially it's a Friday, and you made some money. You can just close up shop and say thank you, and I'll see you on Monday. Right? No reason to keep trading if you are happy with what you've made and content, because you just never know. These markets never know. It could inject some volatility at any time and kind of run us through any one of our areas or any one of our trades, and We've been very lucky this morning that everything's been kind of hunky dory, going well. So, just a thought. I'm not going to tell you how to trade or what to trade. Throwing it out there. All right, next level on the downside we're looking at is down at the 01 area. And let me give you a couple other levels here in case the market really decides to cough it up. We've got 01 is our next area, then 58.90. And then below that, I've got 78, 67, and 56. And below the 90 there that we gave you, last level that we gave you, we've got 78, 67, 56. Remember, we can use the levels all day long if you were going to trading all day long. You have to trade or if you need to trade. But again, it's Friday, and if you're up a little bit, you're good to go. There are the additional support levels on the downside you see there that we gave out, 78, 67, 56. Thanks, Maureen. I appreciate it. Thanks, Don and Maureen, for filling in for me while I was away. And we're back.
Really glad you're back. We kind of commandeered your room for a little bit, but Don did well.
That's okay. That's what happens when I'm not here. You're supposed to commandeer it. Otherwise, I'd be in trouble. All right. At least we've had a good morning this morning as far as our methodology is concerned, what we're trying to do. Kind of walked you through some of these trades today. We're here. We're going till 10. So I'm just saying that we average 4 to 5 trades a day. I think we've kind of accomplished that right now, at least 4 for sure. And again, we've also been very lucky in the sense that we've actually made money on all of them. So it's kind of nice. Michael, well, I mean, again, these are good areas of support. At least we're just trying to find these inflection points to create opportunity. So that's all we're trying to do. Just remember when I'm not on fire that you said that I was on fire. Doesn't always work out that way. Just remember that. All right. Again, market got down here to 10. If you did jump in lower end at 11, but I have a stop there at 9 for in case I want to try to keep something here, but it's only just a small amount, so not really caring. I'm not really worried about it. Just leave it in and see what happens. Next support level we have is down at 01. Right now, a little resistance would be around the 30 area. If anybody has any questions, feel free to ask in the chat. We've had a pretty good morning this morning, so we're looking at the 01 now as the market continues to downtick. That's our next support level that we're shooting for. You can see there in the chat the levels that we gave out this morning. We, like I said, levels we can use all day long. The market here definitely kind of taking some profits here on a Friday, considering we've been up at the 60 handle for a while, and people taking a little bit of profits against this nice little rally that we've been having. And no, not surprising actually that we're, especially after Powell did not give a resounding answer to some of the questions that he was given to yesterday. Kind of mumbled against some of these. You know, his interviewer was very good, and he kind of did not give straight answers to some of the questions that he was asked, and they're kind of wondering why, in regards to the economy, obviously, and interest rates. All right, we continue to slowly downtick here a little bit. Yeah, definitely the bond market is telling us a different story than what's going on here. So obviously, have to be a little bit mindful of that.
Has the spread widened any?
No, well, we're not inverted anymore.
Okay,
So,
because after the election, it came back in within range.
You're right, right. Yeah, but no, they didn't. Yeah, it's been ever since they cut rates to 50% rate. The bond market has been really on a tear to the downside there. So it's been since then. It's weird, but it is what it is.
When you're seeing the bond market go down, as a general rule, what is it telling you?
Well, this is like it's one thing when it goes down a little bit or goes up a little bit, but this is like a move.
Yeah.
This is like a breakout move. Like I said, the yield is trading around probably about almost 450, I would say right now with this break here today. Close to it anyway. 445. It was this morning before the break, so probably trading in the close to. So I would say right now, you're definitely there. I think the bond market is telling us there's inflation issues. Okay, and that goes in contrast to what the Fed is doing because they say the inflation's under control and that's why they're cutting rates. But the bond market is telling you something totally different.
Now,
So,
how is the yield calculated on a bond? Is it the difference between the 10s and 30s?
no, the yield is calculated based on the bond price. See, when they issue a bond, a price in the bond, there's a price that each bond is going to be worth, let's say 5%, right? And so when the price fluctuates, the adjustment to the bond price is adjusted. So at 100%, if the bond market right now is trading at 115, this yield on this bond probably, and I'm guessing that what's been going on here was probably a yield of 5%. Yeah, 5%. This is a 5% bond, but because the price is 415, it adjusts to 450. So the bond is issued at one price, and then the market adjusts the bond price according to what the market is at the time. So I don't know if that makes sense, but
now let me ask you this: when the yield, as bond prices fall, does the yield on them fall also?
the yield goes up.
It goes up. Okay.
You got an inverse relationship between.
And so when the bond prices are up, the yield's going to go down.
Bond prices are up, yield goes down. Correct.
So when we are looking at a non-inflationary environment, the bond prices should go up and the yield should be down. Correct.
Correct.
Okay.
Right. But again, the bond prices have been, before they decided to cut, the yields, the bond prices have been a very steady yield between 4.25 and 3.75.
Yeah.
Right. They were pretty much right there. So this is a breakout from that the bottom or the top end there at 4.25. So we're at 450 right now. So almost.
And this is the yield is when they auction off bonds. That's the interest that they're paying.
Yeah.
Okay.
Correct. But again, the bonds are going to be the bond movement is going to be reflective of what the Fed does, and when the Fed is cutting, you would figure bond prices should rise. Fed is cutting, bond prices are not rising.
Yeah.
So there's your dilemma that the Fed has. I don't know what that means right now. So it means something. Some people are saying it means disinflation, but the return on the yes, that's true. All right, market continues to slowly downtick here. You can see that the support area would be down at 01. That's our next support level that we have. We gave you additional levels in the chat that you saw earlier. Let's see what it wants to do down here at the 01 area if we continue to downtick. A little resistance right now would be around the 25 area on the upside. All right, market here staying on these lows. Again, not really a surprise. I mean, we've been in the 60 area since the election, which was last week. They popped it up here, had a nice little election rally once Trump got elected. They came up here and they kind of gravitated there for the last 2 or 3 days this week in the 60 handle. And, after a little profit taking here, a little nervous, nothing wrong with a little profit taking. This is not like it's a nice break, but it's not like a crazy. This is breaking, going down to support, rallying. There's some, it would be a bad break if we had our levels and they're like going through them like a hot knife through butter. But it's not. It's a controlled break. This is just one of those breaks that they're taking some profits from the rally, from the Trump rally, his election, and I think this is, if I'm not mistaken, what they were. Remind me, down, the night of the election, what was the market was at 5,800, 5,900, something in that range. So, we're coming down basically just to this area here that the market, started its move to the upside. If you look at the bigger picture, and we're just looking at the smaller picture, where all we're trying to do is take advantage of ebbs and flows. We're not looking at the bigger picture. I just give you the bigger picture to make you think I know something, but I don't. All right. If we close, maybe below 57.50. Let's close. That is a good number, by the way. All right. Slowly down ticking, low support, the 01 area. Again, keep your stops in place. Not going to love any trade we put on. And like I mentioned earlier, if you're happy with the amount of money that you make this morning, and it's a Friday, nothing wrong with putting on a simulator. Or I hate to even say, the micros. I hate to even suggest it. I don't suggest it. It's not a good thing. All right, coming down here to the 01 area. All right. Still didn't get filled. Anybody get filled down there? Definitely teasing us here. Right. Yeah, I got in there at a quarter since we don't give me my twos. Just for a little bit, see if I can get a little bit of a pop up here. All right. All right, so see what happened there? A whole bunch traded at a quarter, 50, and 75. 1,700, 2,500, and 2,500. There was some buying coming in there against our O1 and got down to 2. I did not get filled on my 2, but when I saw the orders coming in there, those buying orders, and then the market kind of holding, I just dumped it up a little bit and got my quarter in there when the last time I went down there. Only because I looked at the price action and I made that adjustment according to that. Obviously, if it continued to go down, I would have filled on the rest of it. But you see, I don't know if you guys have the number of contracts traded at each price. You can see there was all of a sudden a bump in the between a quarter and 3, quarter, 50, 75. All of a sudden, they were like coming in there, and there were a lot of orders coming in there, buy orders that were holding the market and not going down. Obviously, when you see a level kind of stop and it just keeps trading there, the opposite is happening behind the scenes because the bears are trying to sell it, push it down, and the bulls are either covering their shorts or jumping in there, and the market's not continuing to move in that direction. So definitely was one of those things where I just said, all right, I'll just bump it up here since I didn't get filled there at 20 at 02, but the 02 was against the 01 was perfect. Yeah, no, there was some big buying down there that was happening behind the scenes, but you could see it. You could see it on the ladder ticket when we were watching it down there. That they were pushing it, tried to go, and the orders kept buying it. So there was definitely some behind the scenes support there, and I just jumped in there really quick and got a little nibble. Again, that's just a matter of looking at the price action. So it's one of those things where you have to make those adjustments sometimes. If you're, again, if you're a little aggressive, maybe if you've seen this happen before, I should say, and maybe you're able to jump in there. If you didn't get the O2, anybody get the O2? I don't know how I didn't get it, but I didn't get it. Then I just canceled it and just bought it up, paid a quarter. All right, so again, another area there that the market, again, whether you got in or not, again, you don't necessarily have to get in because we didn't get down to 01, obviously. So if you didn't get in, that's okay. Market definitely the 01 is risky. I would not use the 01 based on the price action right now. So keep that in mind. Definitely a lot riskier right now to jump in there at 01, but I think this might hold here for a bit, just based on what they did down there. But again, if there's a lot of pressure, selling pressure, they'll come back after it and probably sell it through. So, but you do have levels, additional levels that we gave out. So. All right. Again, a little bit of pressure in the market, not a big surprise. right, coming back down here to these lows. Be careful there at 01. If you're really aggressive, maybe you dip your toe at even. Sure. Ah, man, that 02, it held again. Now 700 lot traded there behind the scenes, and you didn't even see it. It's pretty impressive there. That 02, for whatever reason, that's a big area. Thought it was going to punch through there, but it did not, and there was a 700 lot that they're buying it there. Somebody's buying it there. And well, they keep coming after it. Those bears they're like, it's okay. I come after you again. Let's see what you got. This is a bulls and bear fight here between the bulls and the bears. That's what they're doing right here. Bears are like, okay, you got me again. Let's go retest you again. Maybe if they had enough, then they'll just give it up and they'll rally it back up to the 25 area, 26 area, somewhere in that range. We'll see. All right. Well, again, hopefully the level there. Again, be very careful at 01. I would not take the 01 based on the price action. Even if you're very aggressive, otherwise the level technically worked, and we could go down. Yes, that's why I'm suggesting that the 01 might not be a good entry point, especially the fact that we're rallying back up here. I think the bulls are going to win this one right in here. Especially since they went down there and tested the 02 again, and big order came in there to buy that. So, yeah, I would say be very careful there. We do break if we get below, especially now that we had double bottom and there's a new bar. Even the even is a little riskier. We go back down there. It's a little bit of a sale there below, even if we get back down there. This could be it for the time being. I think maybe the way that price action is, we'll see. I think they caught the bears a little bit short here, and this is the rally that's happening. I only look at the price, the contracts that's actually traded at each price, and it becomes more obvious when you make a new low or a high versus and then you can always see some value areas that the market creates. This is kind of off of market profile. Market profile looks at the volume that's traded at each specific area. They used to look at time, but now they switched to look at volume, so you can find value areas that the market might bounce off of because it traded there for a while. And obviously the downside there, the value area was definitely around the 02 because of the volume that was traded at those prices down there. So I look at the volume based on the prices at each price, and again, that goes to market profile. You get some value that the market creates at a certain area, and then you can go off of that. That's giving you support and resistance. I keep it very simple around here. I don't look at too many things. You got to remember, I came from the floor. I traded on the floor, and we didn't have computers to give us all this information. So almost like overload of information sometimes. You don't know which one to look at, and then you always look at it and say, after the fact, and say, oh yeah, I should have looked at that because that gave me a. But when I was trading, I didn't have little computers telling me areas of value and this and that. That was created afterwards when computers became, that's when we started trading on a computer more and more. And then all of a sudden, we're looking at different areas, that different techniques that you're looking at, different signals that you can look at. I keep it simple. Try not to overcomplicate things. A job is hard enough. Again, if anybody has any questions, feel free to ask in the chat. We've had a pretty decent morning this morning based on the levels we gave out. All right, just kind of bouncing around here a little bit. And a little resistance, we're on the 20 to 23 area on the upside. And be very careful there. If we get below 01, 02, I mean 01 even area, I'd be probably looking at the 90, 58, 90 on the downside. That would be my next support level. Again, the issue there is if you do, again, remember what our job is here. Our job here is to scalp the market, right? So yeah, it'd be nice if we can get 10 points out of it, but there's no guarantee that the market will continue to downtick and get to that. There's a rally that I thought might be happening because the bulls are going to win this one. Nice little pop up here. Again, it's those caught, little resistance around 20, 22, 23. Anyway, so in regards to your question there, no, there's no guarantee that if we go, because there's a sell signal below 01, doesn't mean that we're going to be targeting the 90 area or 91 area. Just means that, again, remember, we're scalping. So if we do sell the 01, our main objective is not to make 10 points on the trade. That's not what we're trying to do here. We're trying to scalp. So yeah, it'd be nice to try to make 10 points on a trade, but I can't tell you that that's what we're trying to do. If you're a position trader and those are your goals, correct? Then that's what we would do. I mean, I keep going back to selling the 40 area above. That would be the best opportunity that you had to be able to stay short for this move to the downside, because it clicked up there, and then now it's a matter of a trailing stop, and then just have a trailing stop, and then try to see if we can get to our levels and maybe cover them at our levels. But to say that if we sell the 11s or below 11, and you're going to look for a 58, 90 area, and that's where your target is, that would be our target, but that's not what we're trying to do, because we're trying to scalp. So if we get 2 or 3 points on that move below 01, then we're going to take it and maybe keep one lot or something to see if we can get down to that 90 area. Otherwise, just scalp it, take your profits, and if we get back down to 90, trade that, scalp it from the long side. And if you want to try to keep a one lot, to try to get you down to 90. That's great, but you're not going to lose any money on the trade is what I'm trying to do here, because all we're trying to do is scalp. So the mentality of like trying to run, make a runner and take 10 or 12 points out of it is good, but it has to be the right situation, right? I mean, like I said earlier, I was going to keep a one lot below 09 there, right? That didn't work out. The one lot would have been to keep the 02s here, and it ran all the way up there to 15, right? That was the trade. And once we saw how the price action handled there at 02 and how the market was reacting there, that was the trade to get long and run it up to it ran all the way up to 15, and then you can take your 10 points out of that, which what I was trying to do against the 09 the 10-11 area, but it didn't happen. It happened here at the 02 area. So again, it happens. It has to be the right way of getting in, and it also has to be the right way of trading out of it. And also has the right, you're I don't know when we're going to hit a low or a high and we're going to sell that, but I can manage the trade based on how I take profits, and then keep something to see if I can get that big move. I hope that makes sense. It's sometimes boring to trade that way, because again, the issue here, what I think the reason that you're saying what you're saying is because the markets are moving around a lot today, and you feel like you can probably take a little bit more than what we're talking about here, because you feel like you're seeing these big moves, but most of the time we're not getting these kind of markets where we're getting these big rotations. All right. And most of the time the markets are very tightly wound. Like yesterday's range was maybe to 20 S&P points, for the morning, or 20 or maybe 25. And we traded around those 25 S&P points. Today is, we're breaking out here a little bit. So you feel like, oh, I should be able to make more than, 2 or 3 points on the trade. Yeah, you could, but you have to be able to find the right entry point to be able to take that opportunity. It's not like this is an anomaly here that we're getting this breakout. Now, this could go on for a day or two, but then we're going to get back into the quote-unquote normal kind of trade, where we're trading within 20 or 30 S&P points, and then we're just waiting and waiting and waiting. We're getting many opportunities today. Like I said, we average 4 to 5 trades a day, but we're not always going to get that, because the markets are not going to give us those opportunities, because the markets don't move that much. Yeah, trend days, especially to the upside, are not good days for us. The upside trend days are terrible. So we're coming down here. We're going to test this 02 again. We'll see how good the bears are very stubborn, right? They rallied it. They got the shorts out, the weak shorts out. They rallied up to 15, and they brought it right back down. And now we'll see how solid this 02 area is. I would be very careful here against the even 01 area. I would not touch that. It's a little bit of a sale there below even, but again, the way the market's trading and the amount of volume that's traded there at 02, there's a little support here, but so I'd be a little bit careful here. I don't love this trade, selling it here below. It's not my favorite trade. Let's put it that way. And the 02 still being stubborn. So I don't like to sell through unless it's a clear indication. The way the market's trading right now, it's not clear for me to sell through. I think there's a little support here and around the 5,900 area. I don't love the trade. I would rather wait for 58.90 and trade that area instead of me trying to sell it through and looking for that. It's not my favorite trade, but it doesn't mean that you don't. Again, the problem is selling it here, and the bulls come back and start pushing it back up. There's a little back and forth here between the bulls and the bears. You can see that. So they're not giving up, those bulls. They like this area. Anyway, like I said, it's Friday. We made some cash. We're coming here to the end of our morning session. So I would just use the levels as my next trades instead of trying to use price action trades. Right now, resistance would be around the 20 area. I would use just the levels as scalping opportunities versus, especially since if you're up money this morning. If you're really a good up money, it's Friday, you can easily shut the machine down or walk away from it and don't worry about it. Because you know what? There's always Monday. So again, be careful here if you're going to trade the even. If I would do anything, I'd be trading the even, but that's about it. I would not be doing anything else. Otherwise, I'd look for the 90 on the downside. If you're going to nibble, you're going to nibble at even, because the even seems to always be something that they like to nibble at. Even is 59 even here, but the way it's trading is the only thing I would nibble at if you did nibble at all. And we're getting a little bit of a rotation here against that nibble. If you're gonna do it at all. Those even levels, they usually do work, except it did not work above when we were trading the 6,000 level the other day. Kind of ran us through there, but most of the time those even levels do work for a little bit of a scalp. Here's case in point, right? All right. Well, hopefully, kind of helped you out here a little bit. We are coming here to the end of our morning session. Again, if anybody has any questions, feel free to ask in the chat. You will see the levels that we're going to show up one more time. Again, you can use the levels all day long. Price action trades become a little bit more dubious as the day goes on because the dynamics of the traders change. There's less traders in there. Everybody trades a little bit differently in the afternoon than they do in the morning, at least for us. So we kind of just stick to the morning hours to give us those opportunities. There are the levels again for you in the chat, those that we can use all day long. You can see the additional support levels on the downside there. Next level on the downside we're looking at is down at the 58.90 area. Upside resistance right now would be around 20. No. Well, if we start rotating to the upside, there are a lot of resistance areas there. So, I would just probably just be patient and wait for, 38 would be our pivot, and then our levels on the upside. There is some resistance at 20. There's some resistance at 26. There's some resistance at 32. Again, those are all rotations to the upside if you're looking for those price action trades. But again, it's Friday. You're up money. Hopefully we are. Catch everybody on Monday. So if you have any questions, I'll be here. You can ask questions in the chat. Let us know. I'll get back here in a bit. Everybody have a great weekend.
See you guys on Monday. Have a great weekend.
At least 50. 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 50? At least 50? At least 50. At least 50 quarters. quarters. 50. At least 50 quarters. 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 At least 50 orders. At least 50 quarters. At least 50 quarters. At least 50 quarters. At least 50 orders. At least 50 quarters. 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 50 quarters. At least 50 quarters. At least 50. least 50? At 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 least 50. Automatically, at least 50. Automatically, at least 50. At least 50. At least 50? At least 50? Ice 50. At least 50. At least 50 quarters. At least 50 quarters. least 50 quarters. At least 50 quarters. At least 50 quarters. At least quarters. At least 15 quarters. At least 50 quarters. least 50 quarters. At 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 least 50 quarters. 50 quarters. At least 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 50 quarters. least 50 orders. At least 50 orders. At least 50 quarters. At least 50 orders. At least 50 orders. At least 50 quarters. At least 50 quarters. At least 50 quarters. At least 50 quarters. 650. At least 50. At least 50. quarters. At least 15 quarters. At least 50 quarters. At least 50 quarters. At least 50 quarters. At least 50 quarters. At least 15 quarters.